Hello and welcome to the January 21st, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring ticker symbol ALV Autoliv Inc. This is a $3.6 billion consumer goods company that develops, manufactures, and supplies automotive safety systems to the automotive industry. Similar to many of the auto companies, we've seen companies like Ford continuing to move higher throughout 2009. ALV's really been no different. We did see a little bit of consolidation through the months of August, September, and into October, but off of the early November lows, you can see this is a stock that ran from a little over 33 to just recently up to $46, and this was over just a little more than 2 months. So it was a pretty big run to the upside. Got a little overbought. Also, you can see that the MACD on 3 consecutive higher highs in price printed 3 lower MACD readings, so we had a triple long-term negative divergence, and what we would expect from that is a move down to test the 50-day moving average and for the MACD to start heading back down toward the MACD center line. And that's really what's transpired here recently. Now, over just 4 days, we've moved from almost $46 down to about $42. Actually, today's low, or Wednesday's low, printed $41.93. I would expect that we're going to see some support in this area. You can see that prior highs, we had 2 or 3 highs previously at about the 41.50, 41.60 area, and then of course we gapped up to about 42.50 or so back in the second week of December. Notice very heavy volume accompanied that gap up and that break of price resistance, which now becomes support. So this whole area right in here between let's call it 41.80 and about 42.50 is pretty good longer term price support and gap support. Also, we've got the 50-day moving average. Well, we had a test of that on Wednesday, and that was the first time we've had a 50-day test since ALV actually traded just beneath the 50-day back in early November. So all in all, I think the risk-reward on ALV is much better now than it has been at any point over the last couple of months, and I'm talking about risk-reward from a long perspective. To the downside, we've got this price and gap support area where we're currently testing. I would go down to about maybe the 41.60, 41.70 area as your first key area of support. The 50-day coming in at 42.06, also providing support. Below that, if we were to lose that support area, then we'd be looking at gap support down around 40.50. Don't know if we'd go back down that far or not, at least on this initial pullback, but you have to be prepared in the event that we do lose the initial price and gap support. To the upside, first area of resistance is going to be right at about this 44 area where we're going to run into gap resistance as well as this declining, what's now become a declining 20-day exponential moving average. So the 44 area would be a very short-term area to take profits if you want to take more near-term profits. But ultimately, I would expect that ALV is going to make its way back up to test this $45.80 to $46 area and maybe ultimately make another breakout and extend this current winning streak that it's been on. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.